Alright guys, good morning. It is Tuesday, May 31st. The market was closed yesterday for Memorial Day, so we're getting back to work. Quick look here at the futures. The S&P futures are down about a little more than 0.5%. QQQ futures are down about 0.25%, and the Russell 2000 futures are down about 1%. So here's my game plan, guys. Obviously, a little bit of a short squeeze last week. At the moment, this doesn't change anything about the bigger picture of the market and the game plan I'm trying to work. But in the short term, I do think we could see a little bit more upside. So we're going to focus on the chart of the SPY, and I'll give you a few levels here. And then we'll talk a little bit about short squeezes. Mainly what do you do if you're short, and then the short squeeze unfolds. But for the SPY here, guys, the level I would have you focus on is going to be about 430. So 430 is a weekly 21 EMA. And the thought process here is as long as we're trading under that weekly 21, we're looking to short the bounces. So you look back at last week, bear market bounce, short squeeze, call it whatever you like. The shorts get trapped. We get the big rip. That close back above that daily 21 does open a door for a bit more upside. So here's what we did because we got a few short positions right now. We're short Wells Fargo, which of course is coming against us a little bit. We're short TXN. That bad boy's coming against us a little bit. So, you can do everything right as far as, take the perfect short entry, you're shorting the perfect short setup. But keep in mind when the S&Ps, when they rally and you get the short squeeze in the market, pretty much everything gets a short squeeze as well. So you can be short the financials, you could be short, the industrials, you could be short healthcare. Once the S&P starts pumping, it all starts pumping. So, we got a few shorts right now, and you got a few options in terms of, okay, I'm short. I still think bigger picture the market trades lower, but what do I do here if we're going to rally for 4 or 5 plus days? And you can sit there like a deer in the headlight, and you can take it on the chin, or you can take a little bit of action. So, here's what we did last week. Just as an example, in the Mastery, we got a pretty cheap call debit spread on the SPY. So Friday expiration, that's my AMC trade. Here's the SPY. Friday expiration, call debit spread. So nice and cheap. We bought it for about, I think, like 90 cents. 420 by 425. So in terms of risk management, or in terms of account management, we're risking like 2.5% on the Wells Fargo trade. We're risking like 2.5%, 3% on the TXN short. So for easy math, let's just say we're risking like 5% of our account on the open short positions. So for a hedge here, we risk 2% on this SPY debit spread. So here's how it works out. Say the market rolls over today, and this week is a bloodbath and we're taking out the lows. Then we can just take off the hedge, right, for a little paper cut, and the short positions take care of business. But again, I think with that close back above that daily 21, we could see a push a little bit closer towards that weekly 21 around 425, 430. So with that debit spread, we get a push towards 425, 430 this week. That spread brings in like a 2 to 3x return. But thinking in terms of percentages, we're risking 2% of our account on that debit spread. If we can hit and we get that push towards 425, 430, we're going to make, 200 to 300% return. So we're going to make, easy math, call it 4 to 5%. In other words, we're going to cover the short exposure. So then the game plan would be, all right, we covered the short exposure. Now we're going to take the profits from this debit spread, roll that into some new shorts. So that's the game plan, guys. So in terms of structure, those are levels to focus on. As long as we're back above that daily 21, I do think we could pop towards the weekly 21. But still, it's a short you want to bounce. Or a bounce you want to short, rather. And I'm going to work that game plan until we're closing back above the weekly 21. The downtrend is no different than an uptrend. In an uptrend, these pullbacks to the weekly 21, they tend to make some of the best buying opportunities. Same thing on the short side. So that's a game plan for now, guys. And then as far as anything you'd want to get long, still the same bunch, right? Energy looks awesome. daily squeeze fire as long, and you got the 3-day squeeze. So I think any dip on the energy stocks, you're looking to take a little bit. The best looking one, as far as my indicators, is probably Valero. So you'll see the color-coded bars on the chart here. These are the big 3 bars. When you have the green big 3 bars on the daily chart, that means the weekly and the daily chart got the perfect combination of trend, structure, momentum. We're looking at stacked DMAs, 10x bars, the Squeeze Pro, all kinds of good stuff. Just as importantly, though, or just as important, if you look at the multi-big 3 tab, we've got that on the daily chart all the way down to the 15-minute. So in plain English, I think Valero was looking pretty good for more upside. I'd like to buy a dip to the daily 21, but beggars can't be choosers. So keeping a close eye on that one. I think Oxy looks just as good. Big 3 bars on the daily chart, big 3 bars all the way down to the 15-minute. Then you got natural gas, UNG. Big 3 on the daily chart, brand new daily squeeze, albeit only 1 day in, but I think it just finds support here near the daily 21. You're looking for a pushback towards 33 to 34. Couple closes under the weekly 21. Could get a little bit sloppy. Keep in mind we're up here at 3 ATR on the weekly chart. So certainly a little bit extended. But yeah, energy, natural gas. You got US oil. Nice daily squeeze. And then the utility sector, XLU. I think another group you want to watch. Good daily structure. And if you look at names like XEL, we don't have the big 3 bars on the daily chart just yet, but we do have them on the lower time frames. So we jumped into some XEL last week. We also jumped into some Dominion. Nice daily squeeze. We got the big 3 bars on the 2-hour, 1-hour, 30-minute, 15-minute. So for Dominion, we're looking for a push towards $88. And for this bad boy, XEL, we're looking for about 78. So there you have it, guys. I mean, this is a game plan we've been working for the last, 2 to 3 months here, pretty much. Short the bounces in the bearish structure. That's your S&Ps. It's pretty much everything except energy, natural gas, oil, and utilities. Just keep in mind. Again, call it a short squeeze, call it a bear market bounce. They're fast, they're furious, and they're mean if you get caught in them. So be open-minded to taking some action. Again, you might take the perfect entry. You might short the perfect shortable structure. Mama market, the S&Ps gets a short squeeze. It all gets popped, at least in the short term. So don't be afraid to trade around that. Like I showed you there at that SPY trade. I'll show you on the Analyze tab. But I grabbed that trade with like 11 contracts. Let me see. Yeah, I took it with about 11 contracts. So I'm risking $1,100. If we can get that push towards, 425, 430, it makes about 25 to 3,000 bucks. So if I net that 2,500 to 3,000 bucks, that covers a lot of the short risk. So food for thought there, guys. But that is what I got for you here this week. Obviously a short week. We're getting started here on a Tuesday, but I'll keep you posted. Get a few more videos up later this week, and you see, looking at the calendar here, yeah, we should be rolling out this indicator pretty soon. So keep an eye out for those updates. But until I talk to y'all guys soon, trade safe and get better this week.